Is Petróleo Brasileiro Petrobras a potential buy now? We'll perform a PBR stock analysis like Warren Buffett, one of the greatest investors of all time. He's invested a lot in oil even if he doesn't own Petrobras. We'll reverse engineer his decision-making process to look at the most telling numbers before we estimate not one, not two, but three fair values for Petrobras. You're going to want to watch till the end because our final rating may surprise you. Along the way, there's going to be a key bonus metric that just might be the tipping point when analyzing Petrobras for your stock portfolio. Is Petrobras a potential opportunity? Right now, they trade for $15.68 per share. Year to date, they're crushing the market. Petrobras is up 65%, while the S&P 500 is up 10%. That's not all for shareholders. Petrobras pays an insane 22.5% dividend yield. That beats the market by a ton, and it's added to these returns in their stock. In the last 5 years, Petrobras compounds at 3% annually. In the last 10 years, they only compounded at 1.5% annually. When we go back before the global financial crisis, in the last 18.5 years, they only compound at 1.5% annually. Keep in mind, with dividends, they beat the market recently, but over this time, they trail it. But the burning question is, why should we be paying close attention to Petrobras? Right now, they trade just $1 below their 52-week high. The company's up nearly double from their 52-week low. How big is Petrobras? They're huge. As Brazil's largest listed company, they have a $99 billion market cap. Petrobras is a Brazil-based integrated energy company controlled by the Brazilian government. The company focuses on exploration and production for oil and gas in Brazilian offshore fields. Production in 2022 was 2.7 million barrels of oil equivalent a day, 80% of which was oil production, and reserves stood at 10.5 billion barrels of oil equivalent, 85% of which is oil. At year-end 2022, Petrobras operated 11 refineries in Brazil with capacity of 1.9 million barrels a day. It distributes refined products and natural gas throughout Brazil. Now with that understanding, let's dive deep into Petrobras' numbers with the Select 6 stock analysis. Starting with metric number 1, we want their average return on capital in the last 5 years to be above 14%. A normal business earns 7% returns on capital. When we look for a benchmark that's double this, we can build in margin of safety based on the quality of the business. Petrobras as an integrated energy company is going to be cyclical with the price of oil and natural gas. They lean much more heavily toward oil, so this is what their returns depend on. They earned returns about 11% in each of the years leading up to 2020. Since then, the company's returns have really skyrocketed. They earned 44.5% returns in their last year. Today, they earn 35% returns. When these are averaged out in a given year over this time, Petrobras earns 21% returns on capital. That's huge. It's 3 times better than a normal business. This is a big check on metric number 1. Metric number 2, we want growth to support their high returns on capital. We want to see sales, earnings, and free cash flow growth in this time. By looking at these numbers, we get a view of what the company went through during 2020. Their revenues were declining coming into this, and they dropped even lower. The company barely had positive earnings, but their free cash flows have steadily grown in each of the last 5 years. In this time from 2018 until today, Petrobras' revenues are up 51%, their earnings are up more than 6 times, and their free cash flows have almost tripled. This is huge growth for the business. It's a massive check on metric number 2. Metric 3, we want earnings per share growth. This looks at Petrobras from the view of an individual shareholder. As we learn, their earnings today are up by 6 times from where they were at in 2018. They were up around 5 times last year. Petrobras' shares are about flat. They have not issued or bought back many shares during this period. This means their earnings per share have grown on the back of their earnings. It's another check on metric number 3. Petrobras is perfect so far. What does the rest of our analysis have in store for the company? Metric number 4, we want to see something similar. We're looking for free cash flow per share growth. This is almost the same story as their earnings. The difference is their free cash flows have grown just slightly slower, only tripling over this time. That's still massive growth. That's insane by most metrics. It's another huge check on metric number 4. Through 4 metrics, we're 4 for 4. Before we look at the company's balance sheet and get to our valuation estimates, why don't we check in on our bonus? Right now, Petrobras pays an insane 22.5% dividend yield, but is it safe and can this grow in the future? That's what we want to figure out through our bonus. We want their dividends to be supported by their free cash flows. Petrobras is an integrated energy company. Their returns and free cash flows depend on commodities, which can fluctuate in cycles. The company in recent years has opted to return a ton of their free cash flow as dividends to shareholders. They've covered their dividend payouts in 3 of the last 5 years. It's worth noting they paid out $3.23 per share in 2022. This has declined in their last 12 months. They paid out just over $2 per share in dividends. With recent changes in the governance of the company and a push for more oil production, they could reduce their dividends into the future. It's important to note, as a government-controlled firm, Petrobras's dividends and the way they return capital to shareholders may not always call for rational capital allocation, as they have to consider the view and direction of the Brazilian government. This could affect their dividends outside of just the raw financials of the company. Yet this is still a huge yield compared to their free cash flows and their market valuation. Even though they cut their dividends and they didn't support these last year, they do support their dividends today. This is actually what we want to see, so it's a check on our bonus. In recessions, it's companies with too much debt that can have the biggest losses and even go broke. Metric number 5, we want their net debt to be below the sum of their free cash flows in their last 5 years. Petrobras has lowered their net debt over this time. This was at $69.5 billion in 2018. It dropped to $42.5 billion last year. Today, it's at $46.5 billion. In these last 5 years, Petrobras grew their free cash flows each and every year. They produced $122 billion of free cash flow in just 5 years. That's incredible. It's nearly 2.5 times their net debt position. This is a huge check on our 5th metric. Petrobras looks like they easily support their debt loads using their free cash flows. Keep in mind, these free cash flows do depend on the price of oil and the amount of capex the company invests into the business. Still, this is a ton of free cash flow. They could pay off all their debt with their cash and their free cash flow in just over a year. Flawless through our first 5 metrics, does Petrobras have what it takes to go 6 for 6 on our analysis and be a perfect Select 6 stock? How about we find out? The big metric of them all, metric number 6, we want Petrobras's average 5-year free cash flows divided by their enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 3 ways we'll estimate their fair value. Right now, they have a $144 billion enterprise value. This looks at the company like a private business by adding their net debt to their market cap. In the last 5 years, we learned they produced $122 billion of free cash flow. This means they produced $24.4 billion in an average year. When we divide that by their enterprise value, we get a 17% average free cash flow yield. Currently, the company produced $36.8 billion of free cash flow in their last 12 months. When we divide that by their enterprise value, we get a 25% current free cash flow yield. These are both insane. They blow our benchmarks out of the water. This means Petrobras has done it. They go a perfect 6 for 6 on our analysis. It's a massive check on metric number 6. But don't just run out and go buy the business. This is one of just 3 ways we'll value Petrobras. You're going to want to watch till the end when we give our rating and triangulate Petrobras's value, as it may surprise you. Everything we've covered so far is important, but there's something missing that, in my opinion, is the main reason to analyze Petrobras. This takes us to look at a discounted cash flow model. A DCF model is like any model in any field. Its outputs are sensitive to its inputs. We'll start with an average of their free cash flows in their last 3 years. These have been very good for Petrobras. That's something you want to keep in mind, as the company's had a low amount of predictability in their past. This can affect our assumptions. It's up to you to figure out if these will be accurate or not for the company. If we assume Petrobras grows their free cash flows at 3% in each of the next 10 years, then in the following decade, we'll assume that this free cash flow is flat. Let's add in their tangible book value to give an estimate of their net worth. If we want a market-beating 15% rate of return like Warren Buffett looks for from his investments, at today's valuation multiples, a rough estimate of Petrobras's fair value per share is around $38. That's up more than double their current stock price. This potentially means the company's an opportunity, as they may have a significant margin of safety. Keep some key points in mind. This discount rate is an estimate of total returns to shareholders based on their free cash flows. It might not make sense, but if the company has a really high dividend yield, their stock price might not increase by this full amount. One key thing to note is the company trades at very low multiples right now, trading at just 2.5 times owner earnings. Historically, this is traded around 8 times. Petrobras has not been that predictable in their past. They're an integrated energy company in a cyclical industry that depends on commodity pricing. Because of this was a rough estimate for Petrobras. When we look at Guru Focus's fair value for Petrobras, which looks at past multiples and analyst estimates as well, their fair value is only around $16, pretty in line with their stock price. When we look at the company's history going back to when they were publicly listed, they had a huge run-up prior to the global financial crisis. Since then, they've been on the downswing. That's something you want to keep in mind, as where they're at now has not matched their historical returns, and they haven't maintained this outside of a wider boom for oil companies. Most importantly, this analysis is not financial advice. It isn't a buy or sell recommendation of any security. Consult with your financial advisor before you consider any investment decision. So far, we've covered many of the numbers Warren Buffett cares about, but he cares about the qualities of a business even more. Let's learn what these are for Petrobras. We're going to start with the long thesis. Number 1, the size and qualities of the pre-salt reservoirs offer Petrobras a low-cost supply that's unrivaled by any other integrated firm. Number 2, Petrobras's backward ways are largely behind it, with plans for disciplined spending focused on the highest quality assets, deleveraging, and dividends with surplus cash flow. Number 3, with investments to increase diesel production, Petrobras can capitalize on the growing domestic demand for refined products. Recent price revisions by the government should help stem losses. Divestment of half its refining capacity should high-grade the portfolio. But it's not all positives. Let's look at a short thesis as well. Number 1, government control implies financial or strategic decisions that benefit the country but could harm shareholders. It also results in a mixed relationship, as the past corruption scandal has demonstrated. Number 2, after the victory of Luiz Inácio Lula da Silva in the recent presidential election, Petrobras will resume subsidizing domestic fuel prices, likely incurring large losses in the process. Number 3, the large shareholder payouts of the last 2 years will likely come to an end soon, as the new government directs Petrobras to curtail dividends and increase investment. Now let's look at these qualities with their numbers as we estimate a combined fair value and give our rating. By looking at Petróleo Brasileiro Petrobras, stock ticker PBR, we've learned in our analysis that they perform very well on almost all the numbers. They earn very high returns on capital. They've grown a lot in the last 5 years. They also generate a ton of free cash flow while keeping their shares flat. In the last couple of years, they paid out a ton of dividends to shareholders. Right now, they have huge free cash flow yields. The big thing to note about this integrated oil and gas company is that they're controlled by the Brazilian government. This makes the operation of their company inherently political. You need to have some sort of insight into the workings of the Brazilian government in order to understand where this company may be at in the future. Still, by looking at their numbers with the Select 6 analysis, Petrobras has done very well in the last 5 years, and they're a perfect Select 6 stock. It's worth reiterating this analysis is not financial advice. Do you have to ask yourself, when might this analysis fail or give false positives? One of the answers is on highly cyclical companies. The major thing to avoid in investing is paying peak multiples for peak earnings. Right now, Petrobras trades at some very low multiples, but they have increased their profits a ton in the last 5 years. Maybe not quite at their peak, but much higher than in the past. With their good numbers and the quality supporting the company, you just need to have that special insight into Petrobras. When we combine the 3 ways we've estimated their fair values, we get a total fair value around $35. That's more than double today's current stock price. You'd have to go all the way back to 2011 for the last time they traded at those levels. Keep in mind the market may discount some of this due to the political risk in the business. Still, when we combine all the factors of our analysis, Petrobras looks like an excellent candidate for more research. Dig in deeper and learn more. If you enjoyed today's PBR stock analysis, like it, subscribe to the channel for more, and watch this next video.